So overall, I think the sentiment there's a lot going on in the world, but in terms of the global economy or, economic sentiment, at least the last couple of months have been overall relatively positive. Eric already mentioned some of the numbers coming from the US, which come in slightly better than expected. As we'll hear in a minute from Dino about Europe, there seems to be more optimism regarding the energy crisis that Europe went through last year. Also in China, we see a very rapid reopening. Some of the numbers coming from China are show a very resilient and strong consumption growth. And overall, I think sentiment, consumer sentiment, business sentiment, if you look at investor sentiment, currencies have improved. So overall, I think the last couple of months have seen some improvement in sentiment. As we'll see in a minute, inflation seems to have peaked in most economies, at least. Also, global figures of inflation are starting to come down. But as we'll also see in a moment, the underlying inflationary pressures are, at least in Europe and the US and many other places, seem to be very persistent. So that does mean that we're probably likely going to have a lot more, or at least continued monetary policy tightening, and that will feed through overall weakness in the global economy. So where does it leave us in terms of growth? So last year, our latest estimate puts global real GDP at 3.3 expansion, which is pretty robust growth. For this year, we're more likely looking at something around 2.3%, with much of the weakness coming in what we call mature economies. So think about particularly the US, as Eric just mentioned, going from 2% to 0.3%, but also for Europe, as we'll hear from Dino about the details. But overall, also in Europe, we're seeing a big slowdown from more than 3% last year to 0.6% this year.